Picture this. You're standing in a glass tower overlooking the city. Suits rush by, screens flash with numbers, and deals worth millions are made in minutes. It looks like power. It feels like success. But behind those polished offices lies a truth few dare to tell. The world of investment banking isn't built on stability. It's built on risk, pressure, and calculated chaos. The same institutions that promise to grow your wealth are often the ones betting against it. While you're celebrating a small gain, they're profiting from your loss. And when markets crash, they don't bleed, you do. Behind every billion-dollar bonus is an exhausted analyst who hasn't slept in 2 days. Behind every record profit is a client who trusted too easily. And behind every handshake, a contract that benefits one side more than the other. They call it the heart of global finance. But if you listen closely, what you'll really hear is the sound of power trading hands. Before you believe the glamour, the luxury, and the hype, let's uncover the truth about investment banking and what really keeps those towers standing. Welcome to TrustArmor, where we uncover the truths behind the systems that shape your financial world. Today, we're diving deep into investment banking, an industry often wrapped in luxury kind of power and prestige. But beneath the surface lies a world of burnout, manipulation, and financial engineering that affects far more than the people inside those towers. By the end of this video, you'll understand how investment banks really make money, the hidden risks they pass on to clients, and what it all means for your financial safety. Stay tuned. What you'll hear today may change the way you look at money forever. To understand the truth about investment banking, we need to pull back the curtain on how the system truly works. Investment banks don't just hold people's money. They move it, multiply it, and often manipulate it. Their core business is built on 3 pillars: advisory, trading, and underwriting. In advisory, banks help giant corporations merge or acquire others, earning massive fees for every deal, whether it succeeds or fails. In trading, they buy and sell stocks, bonds, and currencies, not just for clients, but for themselves, often using leverage that multiplies both profits and risks. Underwriting allows them to raise billions by selling shares or bonds to the public, but they frequently set the price, control the flow, and walk away with guaranteed commissions. While these activities seem technical, the real game lies in information and timing. The bank always knows more than the client. When markets move, they often profit from both directions, buying before a rally, selling before a crash. The tragedy? Ordinary investors, pension funds, and even small governments often hold the risk while the banks collect their rewards up front. Behind the suits and skyscrapers is a culture driven by performance pressure, 100-hour work weeks, and ruthless competition. Deals are celebrated not for the value they create, but for the revenue they generate. Investment banking shapes economies, but not always for the better. It can fuel innovation or inflate bubbles. And as we'll see in the next section, sometimes the difference between brilliance and greed is just one trade away. Let's put all this into perspective with a real story. Back in 2008, the world watched as major investment banks like Lehman Brothers, Bear Stearns, and Merrill Lynch crumbled almost overnight. But the collapse didn't start suddenly. It was built on years of calculated risk-taking, complex financial products, and unchecked greed. These banks had packaged millions of risky home loans into something called mortgage-backed securities and sold them to investors around the world as if they were safe. When homeowners began defaulting, the entire system collapsed. Billions were lost. Millions of people lost their jobs, their homes, and their savings, while many bankers walked away with huge bonuses and golden parachutes. Lehman Brothers, a 158-year-old bank, went bankrupt in a single weekend. It had leveraged every dollar it owned more than 30 times, meaning a small dip in the market wiped out everything. But here's the twist. Even after the crash, other banks learned how to rebuild their power. Governments bailed them out to save the system, and within a few years, profits were higher than ever. The same culture that caused the crisis, high risk, fast rewards, and moral detachment, survived untouched. Behind every glossy financial success story, there's usually a quiet human cost. Families who can't recover, small investors who lose everything, and economies that take years to heal. That's the real truth about investment banking. When they win, the world applauds. When they lose, the world pays. In the next section, we'll reveal the warning signs that show when the system is being pushed too far. Again, investment banking isn't always dangerous, but there are warning signs that history is about to repeat itself. When these signals start showing up, it usually means greed is taking control again. 1. Unrealistic returns. If banks or investment firms promise profits that sound too good to be true, they probably are. In finance, high returns always come with high risk, no exceptions. 2. Excessive leverage. When banks borrow huge amounts to multiply their bets, even small losses can cause massive collapses. The 2008 crash was fueled by leverage, the illusion of growth built on borrowed money. 3. Complex, hard-to-explain products. If financial experts can't clearly explain what a product is or how it works, it's often designed to hide risk rather than manage it. 4. Overconfidence in the market. When you hear phrases like, "this time it's different," or "the market can't fail," that's the sound of a bubble inflating. 5. Rapid growth without oversight. When banks expand faster than regulators can keep up, cracks begin to form beneath the surface. These warning signs aren't just technical, they're emotional. They show when fear fades and greed takes over. In the next section, we'll walk through what you can do to protect yourself. Whether you're an investor, entrepreneur, or just someone trying to keep your money safe. Here's how to protect yourself from the hidden risks of investment banking and keep your financial future secure. 1. Understand what you're investing in. Never put your money into something you don't fully understand. If the language sounds too complex or you're told it's a sure thing, that's your cue to pause. Simplicity is safety. If an investment can't be explained in a few sentences, it's probably not for you. 2. Verify who you're dealing with. Before engaging with any financial advisor or investment firm, verify their registration with your country's financial authority, such as the SEC, FCA, or local regulatory body. Scammers often pose as legitimate bankers or brokers using cloned websites and fake documents. 3. Watch out for pressure tactics. No legitimate bank or financial consultant will rush you into a decision. When someone says limited offer or act now or miss out, that's manipulation, not opportunity. 4. Diversify intelligently. Don't keep all your funds in one bank, one market, or one asset. Spread your investments across sectors and regions. That way, if one sector collapses, your entire portfolio doesn't go with it. 5. Stay informed, not intimidated. You don't have to be a finance expert to protect yourself. Follow credible financial news, attend webinars, and learn the basics of how markets work. The more informed you are, the harder it is for anyone, including major institutions, to exploit your trust. 6. Use secure banking channels. Always enable multi-factor authentication on your investment and banking apps. Avoid clicking links in financial emails. Instead, visit the bank's official site directly. 7. Keep emotion out of decisions. Fear and greed drive bad choices. The safest investors are the calmest ones, those who don't chase hype or panic when markets swing. Every step you take today builds a wall between you and financial deception. In the next section, we'll discuss what to do if you suspect you've been misled or exploited by a financial institution. So, what if you've already fallen victim to misleading investment advice, or you suspect your bank isn't being transparent? Don't panic. Take strategic action. 1. Document everything. Start by gathering every possible piece of evidence: contracts, emails, text messages, screenshots, and payment records. Keep everything organized. These will be vital when reporting the issue or seeking legal redress. 2. Contact the institution first. Sometimes, errors or miscommunications can be resolved directly. Reach out to your bank's compliance or customer service department. Be factual, not emotional. Clearly explain your concern and ask for an official response in writing. 3. Report to financial authorities. If your issue isn't resolved, escalate it. File a formal complaint with your country's financial regulatory body. In Nigeria, that's the Securities and Exchange Commission, SEC, or the Central Bank of Nigeria, CBN. In the US, it's the SEC or FINRA. These organizations have consumer protection desks designed for such cases. 4. Seek professional help. Hire a certified financial advisor or attorney who specializes in investment fraud or malpractice. They'll help you identify if laws were broken and guide you through recovery options. In many countries, there are legal aid services or NGOs that can assist for free or at low cost. 5. Alert your bank and freeze suspicious accounts. If your money was moved fraudulently, contact your bank immediately to freeze affected accounts and block unauthorized transfers. Time is crucial. The faster you act, the better your recovery chances. 6. Share your experience. Cautiously. While it's important to raise awareness, don't overshare sensitive details online. Instead, report through verified consumer forums or watchdog platforms. Remember, financial recovery starts with emotional recovery. Don't let guilt or fear keep you silent. Thousands have been where you are and have successfully reclaimed their funds, peace, and confidence. In the final section, we'll talk about long-term financial discipline and how to protect your money from future exploitation. Recovering from a bad investment experience or discovering the hidden truth about investment banking can leave you shaken, but it's also a wake-up call. This is your opportunity to build long-term financial discipline and protect yourself from manipulation. Let's break it down. 1. Educate yourself continuously. The more you understand how investments work, the harder it becomes for anyone to deceive you. Read books on financial literacy, follow trusted finance educators, and understand key terms like ROI, portfolio diversification, and compound interest. Financial literacy is not optional, it's armor. 2. Adopt a transparent banking relationship. Choose banks and financial institutions that explain their products clearly. If you don't understand a fee, interest rate, or investment plan, ask questions. A genuine advisor educates you. A manipulative one pressures you. 3. Set boundaries with your money. Don't invest emotionally or because of fear of missing out. Every financial decision should align with your goals, risk tolerance, and long-term vision, not short-term hype. If it sounds too good to be true, it usually is. 4. Build an emergency fund. Keep at least 3 to 6 months' worth of expenses in a liquid savings account. This safety net prevents you from being forced into risky investments out of desperation. 5. Diversify wisely. Never put all your money in one product or institution. Spread your investments across different asset classes: real estate, mutual funds, government bonds, or digital investments you understand. Diversification doesn't just grow wealth, it preserves it. 6. Protect your digital and emotional security. Fraudsters prey on panic and greed. Train yourself to pause before acting. Verify before you invest. Keep your online banking secure with two-factor authentication, strong passwords, and privacy awareness. 7. Review your finances regularly. Every few months, assess your investments. Are they meeting your goals? Do the returns justify the risks? Adjustment is part of discipline. Remember, the system thrives on ignorance. Your greatest weapon is clarity, discipline, and patience. The world of investment banking isn't all bad, but it's built for those who understand the rules. Learn them, play wisely, and never surrender your power to fine print again. So what should you take away from this? Investment banking isn't your enemy. Ignorance is. The system rewards those who understand how it works and punishes those who don't. When you hand over your money without asking questions, you hand over your control. Always remember these truths. No investment is guaranteed. If it promises high returns with zero risk, it's a trap. Transparency is a test. Any advisor or banker who avoids clear explanations doesn't deserve your trust. Knowledge builds confidence. The more you understand, the better your financial decisions become. Discipline protects you. Emotional investing destroys wealth faster than bad markets. Review and verify. Always confirm before you commit. You are your own first line of defense. Investment bankers, funds, and institutions may guide you, but you decide your future. Money is not just about numbers, it's about awareness, mindset, and control. The truth is simple. Once you learn how the system works, you'll never be manipulated by it again. Stay informed, stay alert, and most importantly, stay empowered. If this video helped you understand the hidden truths of investment banking, subscribe to TrustArmor and tap the bell so you never miss another insight that protects your money. Share this video with friends, family, or anyone thinking of investing blindly. Awareness today prevents costly mistakes tomorrow. Comment below with your experiences or questions about banking and investments. Your story could help someone else avoid a financial trap. This is TrustArmor, your line of defense in a world full of financial risks. Stay informed, stay alert, stay armored.